I'll have to follow up with her again. I get her more information, but.
So what do you got, man? What you bring?
Let's see what you bring. I always like that one.
Very few people think mortgage rates will drop.
Just 1 in 20 consumers predicted today's mortgage rates.
Oh, 1 in 20 consumers. Yeah. Oh, yeah.
That one I thought leads to other things. This one just support of the market. This one I really would love to talk about. You know anything about that? The Millennium Tower?
Yeah, I've been reading all the articles.
Yes. That makes for interesting discussion. And then just some, bare home sale.
I went to Golden Gate University for this meeting, and it was a real estate type thing. And this lady, she comes from Russia, but she's been here long enough. She has still the somewhat heavy accent, but she's like an attorney, decided to go into real estate, was a homemaker.
Yeah.
This woman was beautifully mesmerizing. I mean, it's like.
Oh, distracting.
She knew what she was talking about.
What was her name? Remember?
Yes. She goes by Kate, but her real name is like Kate Teresa or something.
Well, here's what I brought in. Just a quick case, Shelley.
Yeah,
There's really nothing to talk about other than it's equal to it's for the second month in a row. It's at 6%. I think it was 6% last month. So this is July.
You want to lead with that?
And then I have and then these were cut and paste 3 articles. Yellen says Fed grilling biggest banks amid Wells Fargo furor, which I think is great.
That's right. Wells Fargo.
Massive shortage of appraisers, and I wanted to know
that
from
is
you,
a big issue.
Is it a big issue here in California? Because they're talking about it being all the hot markets, and they mentioned Colorado. So, and then my favorite California-based economist for the month of August said California continues to add jobs.
I have something on employment too.
So, and whereas nationally unemployment is misleading, according to national articles, because they're not counting the people who gave up. And then
people give up.
And then consumer spending is nationwide is not that strong, but it's strong in California because jobs are strong.
Yeah.
Because jobs are strong, retail sales are strong, and so again, California, we have all the drivers for continued strong real estate market, but nationwide, it's.
I think what we could do is we can take that, talk about it a little bit, and then talk about how that's putting pressure on appraisers. Because of the volume of business, and now, this goes in so many directions as far as we're concerned, because they're being selective now. They don't want complex assignments because they don't get paid enough to do them.
Right, and we've had trouble even just getting BPOs and stuff from AMSA.
Real issue, compounded by regulation, and just great topic.
Okay, well, I'll lead off with the economic news about California, and then we can go into all kinds of goodies here.
And these are
stuff too.
These are still pretty accurate.
Okay, good. So our first one is 6:55, which goes by pretty fast.
Yeah, so I'm going to lead with you.
Feels like a short one.
Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hahn from Pacific Private Money, one of California's fastest growing mortgage investment firms, which is the truth, by the way. I don't just say that. And Rob Spinoza.
No, it's not. It's true.
It's true. We did a survey.
It's true hyperbole.
And Rob Spinoza of RPM Mortgage. Our phone number is 888-912-1190. Use that number to answer trivia questions for 3 tanning certificates given away during this show. And those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is off-color nursery rhymes. All right, we've got a lot to cover. Mark, we're going to start right with you.
So my favorite economist, who I follow frequently, California-based, Chris Thornburg of Beacon Economics, had a blog post for August results that had come out recently. Economic news for California remains really bright. And why I bring this up for California? First of all, California is adding jobs again, 63,000 new jobs. Labor force is expanding, and it's really. There's California and there's the rest of the nation.
Yeah, we forget about that.
Yeah, and because I also, as I'm this past week, as I'm reading and looking at all the favorite blogs that I follow, both California and nationwide. On the nationwide side, even though the statistics for unemployment look favorable, when you read behind there, it doesn't include all the people that basically gave up. And so our articles point out that, or critics point out that the nationwide economic employment data is misleading and suggesting that there's inherent weakness in the economy. Also, consumer spending nationwide is not very strong, but in California it is.
But I have a question. When it says people who gave up, how do those people live? I mean, they go back with mom and dad, or did they retire?
So there's over 90 million Americans of working age that are not working.
Wow, I didn't know that.
Is the government subsidizing them? I mean, I'm not sure.
Well, they say 50% of working age Americans are living paycheck to paycheck. So I wonder if they are a subset of that. I would think they would have to be, right?
Well, they're not.
They're
If
working.
they're working, they're working.
Yeah, I guess. I mean,
Right, no, that 90 million are people that, including people who've given up and
Wow, that's
or
a
on
lot of
government.
people.
So it's huge. There's never been as many people not working in America, and I don't know what states where that's heavily weighted. I don't know if California. I'm assuming California has its fair share of that, but the fact is that California, the growth statistics, including retail sales and consumer spending, are up, which indicate strength. And of course, since we're going to talk about real estate today, since Rob Spinoza of RPM Mortgage is here today, and the three of us are kind of are real estate guys by experience and by practice
And
here.
by birth.
And by that's right. We're always looking at what clouds are on the horizon that would suggest that maybe we're at the peak of the current real estate cycle and maybe heading down. Of course, that's the number one question I get every week at Pacific Private Money, especially from people who are investing in my mortgage pool fund. They like the yield, but as they come in with their checkbook to maybe add to their account, almost invariably, without exception, they sit down at my office and say, "So, do you think we're in a bubble? Do you think we're about? Do you think we're about to prices are going to go down next year? I mean, are you making safe loans?"
well, I've been making this point now for quite a while because you look at the median home prices here in the Bay Area, and talking about the employment numbers, I have an article with me. I'll tell you where the unemployment is not, and it's not in San Francisco, Marin, or San Mateo.
That's for sure.
Where they're averaging 3.5% Marin San Francisco unemployment rate. So
3.5.
I mean, that's basically everybody.
That's
full
full employment.
right?
Everybody wants a job.
Everybody wants a job is working. So, but one of the key components, obviously, of qualifying for a residential mortgage in today's environment is obviously fully qualified income. And when you're talking about purchasing a home in these higher cost areas, what that often also involves and requires is bonus income from employers, people who are doing well in their job and companies that are doing well. And it all sort of ties into exactly what you just brought up, Mark. It talks about where it ties in consumer spending, because those companies, a lot of them high tech or biotech, I mean, they need a robust environment for them
Let me ask you
to
before we go to a
pay
break,
incentives.
because we have to go to a break pretty soon. But I want to ask you this question.
Yeah.
When you work at RPM Mortgage, when you look at W-2s and all that, in the W-2 it may not say anything about
Doesn't break it in,
bonus.
right? Yeah.
Yeah.
So one of the first things we do is when we talk with a borrower, we get their W-2s and their pay stubs, is we get a verification of employment that breaks out the history year over year for bonus first base.
And then how do you do that? You have to see, you normally get a $50,000 a year bonus? Or
Well,
whatever.
the gold standard is a 2-year average, but every investor interprets it differently. So it's actually, you're touching on a very, very important matter. When somebody goes to get qualified for a loan, that is a very, very careful calculation. Depends a lot on what they're trying to do.
And is the lead underwriter the decision maker?
Well, you would hope it gets figured out well before it gets, because they're in contract by then. But no, we have to look at that very carefully at the pre-approval stage.
Yeah. All the X's and O's.
Mm-hmm.
Okay, tell you what, we're going to cut to our first commercial break here. Before we do, I want to make a nice little mention here for located in the heart of San Francisco's vibrant Union Square district, the Hilton San Francisco Union Square is home to the newly opened Cityscape Lounge, which, by the way, I went to a couple of nights ago. I'd never been there before. That place has got the nicest view of all of San Francisco. And when I say 360 degrees, you go on one side, you see the Golden Gate Bridge. You go on the other side, you see AT&T Park.
Yeah.
You literally see the entire thing.
I gotta
and the food was fantastic. So it's on the 46th floor, San Francisco's Union Square. It's just right off the square at the Hilton. So you got to check that out. All right. So and check them out at HiltonSanFranciscoHotel.com. Nice, easy one to remember. All right, so here's our first question. Off-color nursery rhymes.
I
Here.
generally do well with off.
Yeah. Okay, which nursery rhyme is most likely related to King Richard III as he fell from his horse? All right. The first caller with the correct answer is going to win the tanning salon, Tan Bella. You get 3 services with that. It's pretty good. 888-912-1190. Don't touch that dial. We'll be right back. Even though it's a hard break, they're pretty good about giving us a little bit of time.
So yeah, you kind of have to get out of the segment at least a minute before. Yeah.
Next one is 810.
KGO.
810 KGO. Yeah, as I'm driving around the last few days, I've been going to like 560, 740, 810, 960, 860. There's another one.
Yeah.
one. And
It's part of this.
it's just, God, it's so boring. Some of
Yeah,
the
some of
shows
the
are just
some of the
so
stuff is really
horrible.
bad. You know,
And
we're
810. Every time I go there, thinking, I wonder who they got on there. They're more liberal, first of all, which
Yeah.
annoys me. And
But that reminds me, Bruce McGowan was
Yeah.
mentioning he's going to talk to KNBR about doing like these little 1-minute segment type things, and he wants to see about doing like offering a commercial or something. He's going to put some proposal together.
okay,
I'll see what he comes up with.
you never know.
You never know.
I had one of my fund investors ask me about rich uncles. There'll be a
Yeah.
long email about rich uncles and REITs and all that stuff.
Well, the one
I haven't
thing I
answered
told
it yet.
people about REITs is that, I mean, if you want to
They're
know
great
about
now.
Well,
They
but not
can
only
go-
that, they have to pay out 95% of their income, which sounds great. But what's the definition of income?
Income.
You know?
Right.
Oh, well, we have these travel expenses that have to get paid 1st and
Mhm.
promotion here, and
So we'll lead.
but everybody's on.
So I'll lead in with this massive shortage of appraisers,
Okay.
asking you to talk about. Hey, I picked up this nationwide article that I thought was interesting, and it made me wonder if we're having the same issue here in
Yeah,
California.
that's great.
for
That's a great
conventional.
issue to talk about.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt and Rob Spinoza. Our first trivia question was, which nursery rhyme is most likely related to King Richard III as he fell from his horse?
Was his nickname Humpty
Humpty
Dumpty?
Dumpty.
Yes, Humpty Dumpty, that's right, because he was, they figured he was a hunchback.
Ah.
And he fell, and his horse's name was Wall, Humpty Dumpty.
Ah.
Is that right?
That's,
See, I
that's
didn't
where
know
the
that.
wall, Dumpty fell off the wall. Anyway,
Wow.
okay, when they say you're off the wall, I guess that's what they mean.
I'll
All right,
figure-
Mark, you got some more good stuff for us.
I do. So I picked up this nationwide article that, and I brought it in because Rob was here, and Rob Spinoza of RPM Mortgage specializes in conventional loans. My company, Pacific Private Money, we do hard money or alternative real estate loans, fast funding, and we do a lot of lending without needing or requiring appraisals. It's not required by statute and by regulation for many of the loans we make. But I saw this article that was titled "Massive Shortage of Appraisers Causing Home Delays." And here it says, home demand is rising rapidly, but a cog in the wheel to homeownership is in deep trouble. The share of on-time closings has dropped from 77% earlier this year to 64% today for loans backed by Fannie and Freddie, which is a large percentage of the loans
Yeah,
that we're
That's
doing
worse
today.
than airlines.
Yes. Appraisal-related issues in these delays jumped by 50% in the last several months. So one person is quoted here saying the appraisal shortage is massive. Ironically, the decline in new appraisers is largely due to new regulations designed to safeguard both banks and borrowers. So yet another unintended consequence of the Dodd-Frank financial reforms,
Really
etc.
tough for those guys, you know.
So in California, do we have a similar shortage here? In
Yeah,
California?
What's going on? Why are they? Is there lack
It's-
of appraisal?
Yeah, well,
Appraisers?
you know, these problems, when the tide goes out, you can see who's been swimming naked, right? So that's Warren Buffett said. So the tide has gone out because when volumes are higher, and now, you know, in certain times this year, the purchase market has been robust, here in California anyway. So what you're seeing is appraisers, they have been embattled by this regulation, starting with the Home Valuation Code of Conduct, which is a brainchild of Andrew Cuomo. It worked its way through the system and basically insulated appraisers from the banks. So there could be no collusion, no undue influence on the appraiser. So we can't even talk to appraisers. We can't order appraisals directly from an appraiser that knows an area well. We have to do that through an appraisal management company. So what happened when the appraisal management companies came into the picture is they commanded the fee from the bank, and then they pay an appraiser a certain portion of that, but then they retain. So now you've got appraisers who can't name their fee anymore. They can't.
So they're making less money.
They're making less money, and the requirements for their education has gone up, and their workload is something that is difficult for them to control because they're not their own person. They're not their own. They used to be sole
It
proprietors.
took all the fun out of being an appraiser and the money.
So they took the fun and the money out of it, and guess what that did?
Yeah.
It reduced their numbers, right?
Isn't
The
it funny
ranks
when the
of
government steps in that to save the day?
So
the unintended consequences oftentimes are worse than the cure.
So what you see happening now, and the reason why you see these delays, and again, we work with appraisers all the time. We can't talk to them, but we work with them all the time.
Yeah.
They're doing a great job. They're trying their best. They're working harder than ever. But they get these assignments, and they look at them and they say, look, if this is a complex purchase assignment with a little bit of a reach on the contract price, and I'm going to have to go to the ends of the earth to justify this value, only to have the appraisal management company scrutinize it and the underwriter scrutinize it, and me have to do more work without getting paid for it, why do I want to take that assignment? So the more complex assignments that are further afield, it's really tough to place them.
Yeah.
Because, hey, if I can go do two appraisals in town close to where I work and be paid the same amount of money for this one that takes me outside of town, complex assignment, going to take a lot more hours and I'm not going to get paid for it, what would you do? Right? You're going to take the... Yeah. So that's what's happening. And yet in the real estate contracts, Mark, you know this, Edward, you know this, time is of the essence.
It is.
So when they write that contract, they're not thinking an appraiser is going to turn down the assignment, or 2 or 3 appraisers are going to turn down the assignment, and then you're going to be a week, 2 weeks out before you can get the order placed. Real estate agents aren't taking that into consideration.
And here's another unintended consequence.
Buyers and sellers aren't taking that into consequence.
I've said on the show previously that for hard money and private money lenders like Pacific Private Money, like us, Dodd-Frank has been a silver lining.
Godsend,
It's
right?
been actually really, really good for business. And this appraisal issue is also a reason I think I'm seeing more applications to, hey, can you close this transaction for me quickly, fast, so that I can conventionally refinance out later on. Well, what does that do for the consumer? That adds to the cost of the acquisition of the home. Again, I'm not complaining because we make these great loans that get paid back quickly. These we call them bridge loans, owner-occupied purchase money bridge loans, and we've been doing more bridge loans this year than ever before.
Well, I want to say something, and I'm not allowed to talk about the Wells. I mean, you guys could probably bait me, and I would talk about it. But I'm not allowed to talk about the Wells Fargo stuff.
Why are you not?
Well, it's very complicated.
Your boss said no.
Yeah, boss said don't do it. Right. Compliance said don't do it.
All right.
But you watch these congressional hearings, and you watch them. I'm seeing this, on social media and stuff, and people are cheering Elizabeth Warren, and they're, yay, go get them, Elizabeth, tear these guys down. You are going to pay for it. You're going to pay for it in the end, because the regulation they put in place is not going to protect the ordinary consumer. It's going to compress the whole industry, and the consumer ultimately will pay for that.
The consumer always pays.
But what you're seeing with appraisals now is just what they've done with finances. They've removed the flexibility to make smart decisions. They've removed the ability to connect the dots between a local knowledgeable appraiser at a good cost with a realtor that knows the market for their client to serve them best.
Because the public ain't educated.
That's so if you go to bat for these regulations that will come down the pike and be further enforced and introduced into the market, just know somewhere along the way your transaction is going to be the one that's more expensive, take longer, and possibly not close.
But seriously though, what do you do about the fact that a lot of these accounts are being opened without being
No, I mean, I don't want to comment about that. I mean, wrongdoing is wrongdoing, but if you throw out the baby with the bathwater, that's different.
Well, what cracks me up is like when you see all this stuff from FINRA and all this SEC stuff, and they all these fines come,
right?
But they don't go back to the people who got hurt.
They
goes to
yeah,
the agency
or the attorney.
Or the attorneys.
Yeah, it's like, oh boy, that's a little bit of a.
Yeah, you're gonna, look. The bigger picture, I don't want to comment on that. Like I said, I'm all for ethical business practices. We try to exemplify that every day in the way we treat our customers, the service we provide to the community. But at the end of the day, if you think these regulators are going to go out there and put in usable, workable regulations in place to protect you,
Survey says
You're wrong.
Okay. All right, we're going to cut to another commercial break here. Before we do, I want to make a quick mention here also for the Weingarten Children's Center. They're having a masquerade party. And I think I'm going to go in a tux and go as James Bond. Right? And
Shaken, not stirred.
I'll get your cocktail ready right now.
Check them out at listenspeaklearn.org. They're having a masquerade party on October 29th at the Santa Clara Hyatt Regency at 5 p.m. It's going to be a lot of fun. Check them out. Good organization. Okay. Second trivia question is, what nursery rhyme came from the bubonic plague of London in 1665?
Ooh, I think I might be 2 for 2.
Really? Okay. 888-912-1190. Don't touch that dial. The best of investing. Will be right back. You guys want to get the email?
Yeah, sure.
Okay. Rob, I have yours. Why property taxes go up for refinance.
Yep.
Mark, why is it better to invest in your fund than an individual B?
Nice. Waiting for that question to come back around. So are we 8:40 or 9:10 on the next one?
We're actually, it says 9:10.
9:10. Okay.
Talk. 9:10.
Let's go on. Press start this time. Dang it.
Yeah.
Didn't press it last time.
I used to do that all the time when we used to run calls for like sales calls. Just like, okay, where are we?
Let Rob go first because I'm going to have
Okay.
it running along and taking up more than half the segment on my emails. The gift of gab.
Welcome back to the best of investing. One more time, I'm Edward Brown, your host, along with Mark Hoff and Rob Spinoza. Second trivia question: what nursery rhyme came from the bubonic plague of London in 1665?
I don't know. Ring around the rosy.
That is
Oh,
correct.
God.
Right? The red, here's a little explanation. The red rashes in the shape of a ring. That's what came
Yeah.
from it, right? And a pocket full of posies because the smell was so bad because of the disease. They
Just carry out flowers.
flowers in their pocket. And the ashes because they cremated the bodies. And all the people
That's
falling
just
down
terrible.
had the plague were sealed up in their homes waiting for death.
Oh.
But interesting, the Great Fire of London in 1666
Cured it.
helped, because it got rid of all the rats.
That's regulation for you. That's
Yeah.
curing the headache by cutting off the head.
That's it exactly. Oh, I gotta think. I'll tell you a thing about it later. Okay. Rob, we have an email. It says, will my property taxes go up if I refinance?
Oh, this is a timely question, too, because we are on the eve of our first installment in California here of real estate property taxes.
Don't remind me.
Yeah, I know, right? Just every collective groan out there in the listening audience. So the short answer is no. When you refinance a property, you don't transfer title. So let's say you're vested, you and your wife are on the home loan or on the title of the property. You hold title as community property. You refinance. All you're doing is you're replacing a lien that encumbers that title. You're not changing the title itself.
But does the assessor get a
The
copy?
no,
Can they ask for it? Or
I guess they could ask for anything, but they don't, as a matter of course, get a copy of anything you do with the change of the lien, and you are not typically reassessed.
okay.
As a
What
result
if you
of
want to get your
refinancing.
real estate taxes lower? Do the assessors sometimes ask, well, have you gotten an appraisal? Have you refinanced?
You know what? I don't deal with that side of the transaction, so I couldn't give you a good answer on that. I will say that I know this varies across the country too, with the way things are done, and obviously California Prop 13. There's a lot of different things to factor into that. Two other things I would mention is that if your area is being reassessed, that can sometimes appear as if you were refinanced and then it was associated with that. It may not be. The other thing is, oftentimes when people have an impound account where they pay their property taxes and insurance through their mortgage payment, when they adjust those accounts, they feel like if that happened along with a refinance or close to a refinance, they think, oh, my property taxes went up. All they were really doing is just is
Kind of balancing that.
getting the account balanced out, right? So, yeah.
All right. Well, you're a wealth of knowledge.
Thank you.
We've definitely referred a lot of business to you for that reason. How
Happy
can we
to
get a hold of you?
I am, my bio's on the Best of Investing website. That's the easiest place, I guess. I work out of the Mill Valley office of RPM Mortgage. We're right on the 101 freeway in Mill Valley, and phone number is 415-367-5959. Don't I need to say that like 4 times in a row now? So
Something like
callers can get that down.
Yeah.
No, happy to help.
that. All right. Mark, an email came in for you. It says, why is it better to invest in your fund instead of an individual deed of trust?
Okay, well, that's a great question. I love answering whenever it comes around because I do speak with people regularly, weekly, daily about mortgage investing, as we call it. And mortgage investing is where you invest a portion of your savings in a mortgage-backed loan, either through a mortgage pool fund, where you write a check to the fund, and the fund is used to fund mortgages, or as many people who've maybe been doing it for years would call me up and say, well, I've been investing in mortgages or trust deeds, as they're called in California, for years, and I wonder if you are taking on new investors, in which case we, depending on how much money they have to invest and what their experience level is, we might say yes, or we might say, well, you would really be better off in our fund. And there are, differences between investing in a fund and an individual note. And at Pacific Private Money, we do offer both. We have a mortgage pool fund that's been performing for a little over 3 years now, and we've been doing individual notes for the better part of 8 years. The reason I'm big on trying to convince people that they ought to strongly consider the fund model versus individual note model is because the competition for individual notes has just gotten so intense
They get snapped up.
that if you're new, or even if you're not new, but you maybe haven't been doing it for a while, or you don't do it regularly, you're not likely to get the type of quality notes that you want to invest in.
Or if you can't make a decision fast
Right.
enough.
Yeah.
That's exactly it. And the thing about our mortgage pool fund is that I cherry pick the best loans that come across my agents' desks to put in the fund. So the people who call and say, well, I want to be able to make the decision because I want to pick the best loan. Well, you're not going to, first of all, you're not going to get the best loans that we see on an individual basis at Pacific Private Money because the best loans go in the fund, generally speaking. So those people who argue, well, I want, I took a course on mortgage investing and I was told that I should always invest in individual notes because my name is on the note as the lender. I'm in control. I can choose the property. I can, review the borrower's information, et cetera, et cetera. Well, that's all well and good.
Yeah, it's got some validity, but
I've got about 20 ultra high net worth investors who can make a decision in minutes as to whether or not they want to invest in a loan that we're working on. And we've been working with some of these guys for years, and they know us, they trust us, we have a track record, literally a phone call and a brief description, and they say, yep, I'll take that, pending a review of the information. New investors, they don't know us.
I mean, isn't it kind of like an investment firm where if you were looking at picking an individual stock, I mean, if you have all these guys there that know everything about the financials of the companies, where they're going to make a smarter and faster stock decision, you would think, than the individual.
well, except that there's forces that you can't control. Like
no, I get it.
Going up and down.
It's a reach, but what I'm saying is when you've got these individuals you're talking about, they know that market. They probably have all of their accounting ready to go to accommodate that next note that fits their model. If you're out there dabbling in the one-on, one-off thing, you're going to get beat.
Yeah, but also the thing is, it's like, I mean, I understand it from an individual standpoint because, especially if they don't know Mark, they go, gee, if I'm sort of. But here's the thing: if you invest in a mutual fund, you're trusting that the manager isn't going to steal the money, right? But what I've told people is I said, you can look at Mark's portfolio and you can pull preliminary title reports. You can search and see, it really is in the name of the fund.
Public record.
So notwithstanding, the personal reasons why certain people prefer individual notes versus a fund, some of the benefits of investing in a fund are you can invest in the fund today. You can start out at $50,000 and increase over time. You can't do that with an individual note. Individual notes, when they pay you back, you have to take the money. When the individual note investor or the individual note holder, the borrower rather, stops making his payments, you're not getting any income. In a mortgage pool fund, that doesn't happen. You're still getting paid even if one or more notes in a pool of notes, right, it's diversified. It doesn't, one or two or three notes not paying that month. First of all, we're accruing the interest anyway and going after the property if they don't pay. But even if they don't perform, it doesn't. It's a small
And
percentage.
that's the other thing is that if it goes in default on an individual deed,
just
they
gonna
have
ask
to
about
come
that.
up with the money to do the foreclosure, trustee sale guarantee, and all that stuff. Whereas with Mark's fund, he kind of handles all that stuff.
So for more information about mortgage investing, and we can be happy to meet with you. We meet with clients all the time to discuss the aspects of mortgage investing, how you can receive 8% or more on your money with safety and security features you're not going to find in conventional and stocks and bond type of investments. Give us a call at Pacific Private Money, 415-883-2150, or go to our website, which is pacificprivatemoney.com.
All right, and when we come back, I want to ask you about deal of the week. So, because people have to understand, what do you actually do? How do you get these high yields? All right, here's our trivia question. Which nursery rhyme relates to the beheading? These are great nursery rhymes. Relates to the beheading of King Louis XVI and Marie Antoinette. There's a nursery rhyme that has to do with them. All right, so stay with us. You're listening to The Best of Investing. We're going to be right back. Mark goes 3 for 3. That's the question.
Uh-oh.
You know this one too?
It would be a first. You know what? I was thinking of deal of the week. I didn't hear the question. What was the question?
What nursery rhyme relates to the beheading of Louis the 16th and Marie Antoinette?
Oh no! He may not be 3 for 3. The crowd goes.
The problem is I can't remember any nursery rhymes.
Hickory Dickory Dock.
There you go.
Let's turn off the clock.
Yeah, I have to think of the Andrew Dice Clay ones.
Farmer of the Dell.
Jack Sprat.
There you go.
Old Mother Hubbard.
Mary Had a Little Lamb.
Old woman in a shoe. Had so many kids didn't know what to do. Okay, so this one is $9.19. This is pretty good size. Is that a good deal of the week?
Yeah, I think I'll talk. I've got a. Let me do this one. Turn that off. Let's reset this. Give me just a second.
Yeah.
I think I've got a. Yeah, I do. Okay, and this
Ready?
one's 9:20.
9:19.
Yeah, so
Ready? Here we go. Welcome back to The Best of Investing. Edward Brown here along with Mark Hump and Rob Spinoza. Here is our third and more depressing nursery rhyme. Which nursery rhyme relates to the beheading of King Louis XVI and Marie Antoinette?
that one I don't remember.
But you will know the nursery rhyme. Jack and Jill.
Oh.
Jack losing his crown, getting beheaded, followed by Marie Antoinette.
Oh.
Boy, these
Went up
kids,
the hill, they went up the hill to guillotine.
yeah, I guess. Well, yeah.
What are they called? It's not- I can't remember.
Oh, these kids.
Yeah.
They say the darndest
I
things.
can't wait to see the nursery rhymes that come out of Afghanistan and
Oh,
Iraq.
yeah, I was just thinking of that. So, all right, Mark, give us a deal of the week.
Well, for new listeners at Pacific Private Money, we're an alternative source of real estate financing, and probably the loans we make the most are loans that have to close quickly. And in fact, when we talked about earlier in the show about the shortage of appraisers and the lack of appraisers and shortage of appraisers, adding to the length of time it takes a conventional loan to close, we're starting for that reason and many other reasons that it takes bank financing longer to close. We're seeing a lot of people who have decided they're tired of losing transactions that they bid on. They're out there making all these bids on homes here in the Bay Area. We've got low inventory. Sellers, the seller's going to take the easiest deal. If someone, all things being equal, if it's the same price and one has basically no contingencies, it's like a cash offer, and the other, or low contingencies, it's just inspections and close in 2 or 3 weeks, versus someone who comes in with I have a financing contingency and I need 30 to 45 days.
Right.
Which one are you going to choose? And so a lot of people in their frustration have learned that oftentimes from their mortgage broker or from their realtor say, hey, well, why don't you consider doing private financing from a company like Pacific Private Money that can close very quickly. Yes, the pricing and the cost of the money is not cheap, but you get the house you want, and you get to close quickly. And so that's probably the most popular loan product we have. But we also do other ones. So the deal of the week that I'm going to share with you is one where, and we see this a lot in San Francisco, where we've got a home that was bought by two people who are not married. They're partners, and this happens a lot, whether they're two men partners or two women partners. They buy a home together, and then they split up. But because it's not a marriage and there's not community property issues, oftentimes we get a loan request from one looking to buy out the interest of
it's a
their
joint tenancy
partner.
at that point, isn't it?
It could be a tenancy.
It could be, yeah, it could be. So, so we got a request in this week for a very relatively low LTV. It's approximately $1 million to buy out the interest of his partner in this property in San Francisco.
Okay.
And he needs $450,000, and he really only needs it for a short period of time. He believes he will refinance out conventionally within 90 days, but he can't conventionally get that loan now. In fact, I think what he said is that the bank's not interested. He can refinance out, but he can't get a purchase for this particular type of transaction. It is kind of a little bit of an odd duck.
Okay.
So that's our deal of the week. And again, so for more information on
what kind of interest rate do you charge?
So the interest rate question.
Yeah.
So this one is so our typical interest rate for money. And again, you can pay us back. There's no prepayment penalty. So we generally do short-term loans, and this one he only needs for about 90 days. So the interest rate isn't as important to him, and generally we're at about 10%. But I think we lowered the rate here to about 9.5%. Again, not cheap, not inexpensive. The points for a loan that size are about 2.5. We kind of scale it based on the size of the loan and the complexity. The documentation and processing is around $1,500. So, but what's good for this particular borrower is he wants to do it quickly.
Right.
Before I guess his partner changes his mind or maybe increases the price. And so we're looking to close this thing like next week. So we've got a kind of a special.
So he's gonna take a loan that's gonna encompass or engulf his first mortgage and then buy out his partner. Is that his plan?
Well,
he's gonna refinance both.
Yes.
Okay.
Yeah.
Understood.
So for more information, if you're a realtor or a mortgage broker or a potential borrower looking to buy real estate, and you want information about how, and especially if your bank or conventional mortgage broker tells you no. Not everybody in the mortgage and the conventional mortgage and banking community is aware of alternative financing options. Pretty much everyone's heard of hard money, but they don't realize that the industry has matured and we're now a regulated industry, and we're not as that it's not like the predatory nature that this industry had 20 years ago. So for more information, check out our website, pacificprivatemoney.com.
And on your fund, your clients are earning what?
We're trending just below 8% year to date. And of course, past performance is not a promise of future results, but we do have quite a bit of deal flow, as they call it. We get a lot of loan applications, which allow us to say no a lot because, again, we're looking to do certain types of loans. We like short term, we like viable exit strategies, as we call it, which really means how are you going to repay us back? Are you going to sell the property, or do you have a bank or conventional loan kind of lined up, or is it something that you're fixing on your credit that we can look at and go, oh yeah, okay, that seems reasonable, and you should be able to clean that up within 6 months to a year and get a conventional cheaper loan and pay us back. So those are the types of loans we're looking for, and we generally charge around 10% in a couple of points. And so our fund has been producing, pretty much on target, right around 8% for the last almost 3.5 years. And so again, that's the Pacific Private Money Fund we're talking about. And if you're an accredited investor, so we do have to qualify people who invest in our fund. That's a regulation. It's not our rule. It's the government rules. Again, it's that dang government getting
Well,
involved in everybody's
that's the
business again.
SEC though, right?
Yeah, that's the SEC. But if you qualify, you can start out with a $50,000 investment and add to it from there. And we've got $20 million of assets under management currently. We're looking to grow the fund to $50 million, and believe we'll be able to do that probably within the next 2 years.
And
Again,
what's the average loan to value?
the average loan to value in the fund portfolio has a 55%
Not
weighted
amazing.
average loan to value. So fairly secure, lots of protective equity. I don't like to use the word safe because that's just not a good word to use with any type of investment. But we have safety and security features in the fund.
Let me put that
to
into
limit risk.
perspective. So if you looked at the Bay Area's, I believe the last stat I read about the Bay Area's collective LTV loan to value, it's right around 60%. But certainly when a typical residential buyer goes in to purchase a home, the gold standard is 20% now.
Yeah,
So, you know, I think people need to remember that too. And in this case, you're well under that amount, and that 20% is what the residential mortgage industry considers to be very safe.
What cracks me up is what he pays in a month is more than a 2-year CD.
Right,
for
right.
some.
Right, we just wrapped up September. I don't have the results yet, but in August we paid out about 0.65%, and there isn't many banks that are paying that out in a year.
Yeah.
Usually you're getting a 0.25%. So at Pacific Private Money, we serve 2 clients. We have our borrower clients who need fast, reliable financing, and that's what we're known for. And then we fund those loans with private capital. So our investor clients are getting returns starting at roughly 8%. So it's an amazing business model that most people don't know about. And again, for more information, or if you're just curious, do go check out our website. And I'm going to be really pleased in this next quarter to send more people to our website because we're revamping the entire website right now. We still have our existing website up that's been we've had for a couple of years, but we've got a new website we're really excited about. So for more information, pacificprivatemoney.com.
Very good. All right, we're going to cut to our last commercial break. Want to make a quick mention. Paintball. Go to our website, click on paintball, and make great gifts for Christmas, birthdays, etc. All right? Don't touch that dial. Best of Investing. We'll be right back for some closing comments.
Go back, I'll mention Yellen
Okay,
at
yeah.
the banks. And maybe Kate, we didn't really get into your stuff much.
We got another segment?
We have, it's a 5 minute.
5
break.
minute, yeah.
Okay.
Yeah, we do
Yeah.
5 segments now.
All hard breaks, those wascals.
Yeah, turkeys.
Come on, man.
Yeah, it goes fast.
Okay.
Yeah,
We don't have a trivia question, so we just go right into it. All right.
Yeah.
Who do you want me to?
Oh, I'll lead in.
Okay. Okay, here we go. Well, welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn and Rob Spinoza. Mark, take it away.
So earlier in the show, Rob mentioned that the powers that be, for him, said they'd prefer he didn't discuss the Wells Fargo issue, the Wells Fargo furor.
So I fed you guys all my bullet points.
That's right. No, but I did come across an article, and so in my list of notes for the show, I did come across an article titled "Yellen Says Fed Grilling Biggest Banks Amid." This is crazy. Okay, I'm sorry about that. They're taking a comprehensive look at the biggest banks, referring to a disturbing pattern of recent violations. So they're going to start a review of not just Wells Fargo, but all banks.
Congress, you can't have it both ways. Dodd-Frank has done nothing but concentrate banking in the largest institutions, and that's been statistically proven since the inception in 2010, 2011. Dodd-Frank has concentrated banking in the largest banking institutions, and now they're raking these guys over the coals for transgressions and other things that they perceive to be undue influence over consumers.
So are they going to bring back the Glass-Steagall Act?
I don't know what they're going to do, but I feel strongly that when people watch these hearings and they listen to what they're saying, always keep in mind that there are two sides to the story. I'm not defending anybody. I'm not trying
It's
to.
a political show
It
too.
is,
These
it is.
politicians are
And
trying to make a name for
that's
themselves
right.
while they're on TV.
And ultimately the consumer suffers when choices are taken out of the market. So keep that in mind. Your local community banks are suffering under Dodd-Frank. They're being snuffed out by these, by the Wells Fargo's, by the Bank of America's, by the Chases, and then you of course, you now see them saying, okay, well, you guys are misbehaving. You're doing things you shouldn't be doing.
So the
it's
Fed
tough.
chairman declined to respond to the most heated questions about Wells Fargo, including whether the
I don't blame
Fed
her.
should consider breaking it up,
I
which
don't
I
blame
just
her.
think is absurd. Not that it's not a good idea. It's not going to happen.
Yeah,
The government's just
break
not
it up
going to
into
break up.
what?
Right. There's just so many open-ended questions with all this stuff, and I think it's easy to go after the big guy, the big bad banks and stuff like that. But just know that the system is propagating. It's causing that to be the way it is. We're trying. RPM is a non-depository mortgage bank. That's all we do is mortgage bank. We're trying to serve the community within the constraints of the guidelines, and it's not easy for us. I can just imagine how difficult it is for banks like that. I'm not I'm just trying to say, hey guys, look, when you're listening to this stuff, please keep an open ear. There are two sides to every story.
Right, and so there'll be more of these hearings. There'll be more dressing down of the biggest banks. There'll be lip service. There'll be proposals that won't get passed.
But if
so
you
it'll
want
seem like somebody's doing something, but they're really not going to do
If
anything.
you want your inexpensive mortgage and an ATM on every corner, you better think twice about what they're going to do with breaking up Wells Fargo and B of A and Chase and all those other big banks. They're providing a service to the consumer. They've made banking extremely convenient for many people over the years.
Yeah.
Keep that in mind as you.
Yeah, otherwise watch the fees go up in other
Right.
areas.
Yeah, you're absolutely right, Edward. I mean, it's going to come back in some other way.
Well, as you said earlier, Rob, it's going to be the consumer that pays. Anything they do to the banks, it's going to impact the consumer. It's not going to, really, even the CEO who agreed, I guess he's going to watch his compensation for this year get sliced by $40 plus million. Do you think that's really going to? That's real money, but the guy's probably worth $500 million.
Well, he has a responsibility too. So it happened on his watch. You're the captain. You go down with the ship. That's the way it is. Nobody's going to feel bad for John Stumpf.
Well, yeah, a lot of people just didn't even say, yeah, okay, thanks. Now what?
Right.
It was kind of going unnoticed.
Yep.
All right, guys. Good show today. We're going to cut out here. Here's our thoughts for the day. All of our life, our parents taught us not to write on walls. Facebook teaches us differently. And when a man gets close to a woman wearing a leather miniskirt, his heart beats faster. His throat gets dry. His knees get weak, and he becomes irrational. Why? Because leather smells like a new car. And with that, tune in. You thought I was going somewhere with that. This is a clean show, baby. Clean show. All right, tune in next week to The Best of Investing. We're going to be giving away more free tanning certificates, sponsored by Tan Bella, which, by the way, they have a special thing where it gets rid of wrinkles.
I don't need a tan. Everybody does.
I know, that's your
show.
data. But check out tanbella.com and see what they have to offer. It's quite amazing, I gotta say. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Okay. What effect timing, boys?
Right on the money.
All right.
So is that one going into the fund?